Hello and good afternoon, good evening, good morning, wherever you are, and welcome to Bull Prime's webinar. I'm Alex, your host this evening, and we have a guest speaker to share with you the best kept secret in trading, a ground rule that will shape your trades towards success. And we hope you find today's session informative and insightful. And just a note before we begin, so the sharing session will last for approximately 45 minutes, and after the sharing, we will make time for Q&A. So feel free to ask any questions throughout the session on the Q&A part at the bottom of your screen. So not to be confused with the chat part at the bottom of your screen. So I repeat again, feel free to ask questions throughout the session on the Q&A part at the bottom of your screen. Now, without further ado, let me introduce to you our speaker, who is no stranger to us. He was featured on Singapore's Channel News Asia for gaining 30,000 US dollars in just 2 years. He has won awards such as the most popular FX trainer in Asia Pacific and top Forex analyst by WikiFX. And his goal is to help others achieve financial mastery by empowering people to design the life that they want. So, without further ado, I present to you Mr. Ang Kar Yong. So, over to you, Kar Yong.
All right. Good evening, everyone. So again, great to be back and having this opportunity to share with you guys a little more about trading. So as you can see on the screen, today's topic is about 80-20 rule in trading, which I think it's a very, very interesting and very appropriate topic for fellow traders as well, because a lot of times traders tend to overcomplicate stuff, spending too much time on their screen, looking at the charts, but yet not, getting the results that you want, right? And then you spend so much effort, but you don't see the outcome in the results, right? So today's conversation and presentation over here is to share with you a kind of a framework, some tips and guideline, based on my personal experience as well, how to make trading a little bit more effective. And if you have actually heard of this 80-20 rule before, you kind of know, right? 80% of your outcome result typically comes from 20% of the effort. Okay. And the objective is, how can you put yourself in that environment, in that zone to actually really achieve this 80-20? Okay. So as mentioned, if you guys have any questions, feel free to put it into the Q&A tab, right? Not on the chat. um, yeah, so I just got a haircut yesterday, right? So seeing some conversation there. Yeah, so put your question in the Q&A. And then of course, if you have any, chat about with fellow, participants over here, then just put it into the chat box, right? So and kind of segregate that. Right. So yeah, the Q&A, I will be answering those questions at the end through the session itself. So you can put your question in first, but I'll be answering those mostly during the Q&A segment itself. Okay. So yep. All right, let's talk about the A20. And over here I put the topic master markets with less. So as I mentioned, a lot of times traders will have the impression that trading equals to you being in front of the markets all the time. And oftentimes they put themselves in the perspective where, you're trading because you want to get out of your 9 to 5. But then you put yourself back into quote unquote a 9 to 5 in front of the markets, right? So that's not the objective at the end of the day, right? So that's why today I think it's also a very, very good chance to really share with you the routine that I do, how I actually typically, I would say about 30 minutes a day to really look at the markets, and then, throughout the day, maybe about 5 minutes here and there, just to monitor any positions or if there's any trade to manage it, right? So I really spend very, very minimum time in front of the market. But you want to be very cautious and aware as well. When we say we spend very little amount of time in the market, it doesn't mean that you have like the hobby kind of mentality. You want to have that full-time, quote unquote, full-time mentality, meaning you're being serious about it. This is not a hobby. It's a business. But yeah, you do not want to spend too much time in run, right? Doing unproductive stuff. So that's the whole idea about that steady training, right? Okay, so as I mentioned, today's objective is to share with you tips, guide, in terms of how you can focus on what truly matters, and spend less time, less stress, and less effort, in the market itself, right? But again, don't misunderstand this as, oh, it's easy. Meaning if today you're very new to the markets, very new to trading, it doesn't mean that, oh, Kyle mentioned, you want to spend regular time. Um, you want to work towards that goal, but obviously, okay, if you're very new to trading, you need to put in that time, the effort, to pick up the skill set, to learn about market. You need to put in time to practice, okay? But obviously, you don't want to be in that loop all the time, right? So that's something that I think you should be very clear, right? When I mention less time, less effort, doesn't mean that um, you don't need to put in the practice, okay? So a lot of times, I put over here, right? A lot of times traders focus on the wrong things, right? What I mean by that is, for example, they would always rotate among strategy. So I think some of you might be also experiencing that, right? You try out one strategy, take a couple of trades, maybe 1 or 2 weeks, you don't really like it, you don't see the outcome that you want, you immediately shift to the next one, right? Without really understanding what went wrong. Or, you start to think about trends like, suddenly recently we have talks about AI, right? It talks about automation. And then you just jump onto the bandwagon because, we call it the next shiny thing, right? So these are things that you want to be aware of. Of course, in this industry, to be very honest and very unfortunate, there is a lot of gimmicks, right? Marketing gimmicks to really attract and draw traders in. And you don't want to be distracted. Okay. So that's where I put 80% of, all these things are noise. And at the end of the day, what really generate results, what really generate consistent profits in the market. I would say the foundations are always going to be the same, right? Which I'm going to share with you a framework that I use, right? If you've been in some of my sharing, you've already heard of that framework before. So we'll talk about that in details as we progress in today's session, right? So ask yourself this question as a kind of a guideline, right? What you do less and get more, okay? So I'll always give this example, right? A lot of times traders like to do scalping, right? Because they have the impression that the more trades they take, the more profits they make. Okay. However, it doesn't really it doesn't equals to that, right? Because the more trades you take, it can also be more losses you're gonna experience. Okay, it doesn't necessarily mean you're gonna make more money. So I always like to compare, right? If today you spend 4 hours, 6 hours in front of your computer to trade, versus another trader who perhaps only spend, let's say, 1 hour, 30 minutes, 45 minutes, right? Within an hour, execute, analyze, execute, manage to trade, right? So one person spends 6 hours, one person spend maybe an hour, right? If today you spend 6 hours to generate, for example, $1,000, but the other person spend 1 hour and generate maybe less, maybe 800, right? If you do the math itself, you start to realize that, yeah, it is more, but it's not significantly more, right? You spend significantly more time, but you actually just make a little bit more profit. So that's where you want to look at it from another angle and say, is it worth it? Okay, so that's what I want you to, start asking yourself, right? Every time you make a decision in trading, is the effort worth? Okay, so e-training, right? So this is actually from Pareto principle. Not only in trading but in general, you do see this principle being applied to many aspects of businesses as well, right? A lot of times, if today you run your own business, if you have like, big clients, you probably also start to realize that maybe out of 100 clients, 80% of your big profits comes from maybe 20% of your client. Okay. So that is generally the principle, right? Majority of your results comes from that small portion of the inputs, right? The significant inputs of it. So what you want to do is you want to focus on what is that 20% that would make the biggest impact in your trading, right? It doesn't mean you put in 20% of effort. It's more like out of the 100% effort, there's this 20% portion that is going to make a major impact, right? And what you want to do is you want to focus on this 20% and kind of like tune it to be efficient. Okay, so I want you to understand, right? Again, I don't want you to misunderstood it as um you just need 20% of effort, right? It's more like out of the 100%, you want to focus on the 20% of it. Okay, kind of fine tune where that 20% can make the biggest impact. Okay, so if you can put that into the concept of trading, right? This is where you want to understand not all trades, not all strategies, not all indicators are equal, right? And then if you put that principle into trading, it's literally 80% of the profits comes from 20% of the trade, right? So what this means again is actually quite closely tied to the principle of risk to reward ratio. Okay, today if you have, let's say, a average risk to reward ratio 1:2, right? Um, you can lose half the trade, you can win half the trade, but you realize that you're going to make money, right? Net because of the risk to reward ratio. Okay, so this is again coming back to the part where that that small portion of winning trade is the one that is going to cover your losses and then gives you the extra profit. Okay, so obviously it's not like specifically 80% and 20%, but it's again that principle being in place. Okay, so start to think of it from that angle as well, right? Risk to reward ratio. Okay. 20% of the setups are likely going to generate most return, right? So what this means again as a trading perspective is based on my experience, right? You might have like, let's say 10 setups, right? But not all 10 setups are going to be executed, right? Sometimes you have an entry, you have a pending entry, but the market doesn't go into the zone that you want, doesn't trigger a trade. There's no trade, right? There's a setup, but there's no trade being executed. So again, whole logic here is how do you fine tune to make it minimize effort that you have, but still generate the outcome that you want, right? So you need to also accept the fact that today I'm going to key in 10 trade set, right? I'm going to key in 10 pending orders, but maybe only about 20 to 30%, which is 2 to 3 of it is going to trigger. And then out of that 2 to 3, okay, across time, right? Maybe I have 10 trades active being executed. Maybe, 3 to 5 of it is going to end up profitable. And then maybe, some of it is going to break even. And then some of it is going to result in losses. But again, that 20% generically is going to cover my losses and potentially make a profit, right? So that's the whole idea around it. Okay. And then if you put that context further, right, into the perspective of time, okay, where you are spending in front of the markets, in front of your computers, okay. Obviously, today, if you're going to spend 6 hours, 10 hours in front of the computer, you're not going to be effective all the time, right? You're going to be tired. So then again, there's that 20% of the time where you're likely going to be more efficient, right? Maybe you're a little bit more energetic during a certain period of the day. So you want to identify that as well, right? So some people are more focused in the morning. Some people are more focused in the afternoon. Some people works better maybe at night or even midnight, right? Where they can really get into the zone of things. You want to identify that. And obviously, if your lifestyle allows it, you want to put yourself in that time zone, okay, so that you can really be focused. And this doesn't only apply to trading, right? You should start to observe, sometimes you work a little bit more efficient. Right? For me, nighttime works better, right? Which means I can do more work, I can achieve more things, spending less time when I'm working at night, okay, versus maybe in the afternoon, right, where I get distracted very, very easily. So then what I would do is I'll try to avoid work in the afternoon, and then I'll try to put my work, in the night, right? So that's where you start to be a little bit more effective, right? So things like this, you want to start observing, identify that, put that into trading as well, right? So some of this I can mention, as we talk about it already, right? Where most traders have wasted effort and time, watching the market all day, right? You need to know when to move away from it, right? So if today the market is ranging, it doesn't matter what time frame you're looking, there'll always be a period of time when the market is just ranging, it's just consolidating, it's just not moving. You don't want to be sitting in front monitoring it all day because that isn't going to be an opportunity. You want to move to the next one. Overloading with 10 indicators, obviously, I think this is a very common logic, right? You might have heard of this before. It's pointless to put in too many indicators. It's going to confuse yourself. It's going to give you conflicting signals, and it's not going to be helpful, right? Every time traders want to look into indicators, I tell them, you need to first identify what this indicator does. Is it a trend indicator? Is it an oscillator? Does it measure momentum? Right? Because at the end of the day, there are a lot of indicators that does the same thing. You do not need them all concurrently on the same chart. It's just going to make things complicated, right? So streamline things again, right? Be effective, right? I talk about jumping between strategies. Does it make sense, right? Over trading as well. Yeah, so things like this, as you start to being aware and start to streamline, you start to realize that you can cut down a lot of unnecessary stuff, okay? And that makes trading more meaningful, right? You spend less time and effort, right? So the 20% lies really in figuring out what makes the most impact in your trading. Okay, so these are some example, right? You want to identify your style. As I mentioned, do you work best in the morning, in the afternoon, at night? Do you work best smaller time frame? Do you work best higher time frame? Are you a swing trader or a scalper? Things like that you want to identify, right? Setups as well, right? Because this is the part where I also share with traders. Okay, every individual is different. You need to design your strategy and your setup according to your personality, right? Time frames, which is basically short term or swing trading, right? That's what you need to identify. Market conditions as well. Some traders perform well during range environment. Some traders prefer trend. Some traders prefer counter trend. So again, you need to identify, right? And of course, RRR scenario is your risk to reward ratio, right? So again, you always want to again go back to the part where focus and put more emphasis on risk to reward ratio, because if you want to go for high win rate, it's technically a little bit more challenging than going for high risk to reward ratio. Okay, so that's the whole idea behind it. Okay, so this is the part where I want to share with you my trading frameworks. Okay, this framework itself is universal in a way where it doesn't matter your time frame, doesn't matter your strategy, it applies. Okay, because it's the foundation of what builds your trading strategy and your trading plan. Right, so I call this the DSC framework. Okay, essentially it stands for direction, setup, contact. Okay, so direction basically means that you want to have a method to identify whether the market is likely going to go up or down, right? So that's the idea behind it. Doesn't matter what you use, right? You can use indicator based, you can use fundamental analysis, you can use chart patterns, right? Structure based, right? Anyway, for example, that's what I use. You need to have a way to define whether the market is likely going to go up, down, or if there is no clear direction, fit that, right? Don't waste time on it. Okay, so that's where you can see how I start to streamline and filter things off, right? When there's no direction, I skip. I don't even need to spend time looking at setup or context, right? So it's like a process where if I don't have a clear direction, I move on to the next pair. If I have a clear direction, I move deeper. Okay? So the next part is the setup, right? Setup is essentially a set of criteria and rules to determine where is my entry, where's my stop, where's my target. I can have a direction, but I may not have a setup. I can show you examples that's happening like just today and yesterday, right? We have clear direction, but we're simply waiting for the setup, which means there's no setup yet, right? So what we do, we don't force anything. There's no need for me to monitor the market as well. I understand that it's going to take time. Probably it's going to be something next week where I would have that setup. Then what do? I don't waste time on that anymore, right? So that's how I streamline things again to minimize my effort. All right. So in my framework, once we have a direction, once we have a setup, the next step is the context, right? Context is essentially the whole alignment of that trade. Is it trend based? Is it a counter trend short term trade? Is there any high impact news coming in? Is this trade something I'm very comfortable and confident in? Elements like that build context of the trade page. So this is the framework, right? So I'm going to very quickly show you some examples. Of all right, so you can see my chart. Okay. I'm going to show you examples that I have here on dollar yen, right? Or in fact, I'll just take dollar, right? I think this is a bit clearer. Okay. So I'm using a combination of different principles to apply the framework of DSE, right? So direction I'm using any wave, okay? So you can see over here, based on just the drawing of the chart, you can see that I'm basically expecting bullish bias, right? This is where you can see I'm expecting market to go higher. That's my focus. Okay, that's my focus to be looking at upside, right? I'm not so interested in selling it. I'm only interested in buying it. Okay, so that's the bias. Okay, but does it mean that I'm going to jump in on the trade now? No, okay, because I need a setup. So what's my setup? I need to then go down to the lower time frame. Okay, my setup is based on SMC model, right? I'm not going to go into like specific details today because of time. But maybe in the future, if there's opportunity to talk about all the strategies, we'll go deeper in that. Okay, but what I need is a setup, right? I don't want to be buying at the very, very top, because if I buy here, where I'm going to put my stop, I need to put my stop maybe below. The risk to reward ratio doesn't make sense. Okay, and looking at where price is, I would probably want to wait for a pullback. Okay, so then I also understand the principle where I don't want to come back too fast. I don't want to pull back to be too strong. I want it to come back slowly, right? We use the term correctively. So if I want this to come back slowly, I have the expectation, okay, it's not likely going to happen today because I'm looking at a higher time frame where I'm looking at H1. It takes maybe like 10 hours, 12 hours, right? Which typically is going to be about 1 to 2 days. So what do I do with this? I know that I have a clear direction, I have a potential trade, but there's no setup now. And I know that it's probably going to take another 2 days. So if you put this from where we are today, 2 days later, for Saturday and Sunday, it doesn't count. That will put us on Monday and Tuesday, right? So maybe this setup will come in on Tuesday next week as potential trade that I can take. So that's it, right? Again, you can see as I'm explaining it, obviously it takes a little bit more time. But once I'm familiar with my processes, okay, applying this DSC framework, literally I'm just spending less than maybe a minute or two to make a decision on, is there something that I can trade? Is there something not? Right? And then I move on, right? So that's, again, streamlining things, where to achieve this, obviously, is not something overnight. You need to be very clear of your plan, of your strategy, of your setup, right? But I just want to show you, examples of the framework being applied, okay? I'll show you another example. Okay, let's talk about one that doesn't have anything bad, right? Crude oil, okay. So crude oil, right? If you look at this, my bias here is basically there's no clear direction. Okay, the market reacted off a key level, doesn't really give us much info. It's neutral, right? So when the direction is neutral, which means there's no clear bias, I'm not going to look for a setup, right? Because I'm not interested in trading the range. I'm only interested when the market has a clear direction I can trade, whether is it pro trend or is it a counter trend retracement. There must be a direction. So when things are not clear, what do? I move on, right? So very, very quickly within that few seconds when I look at it, there's nothing that is very clear jumping at me. I skip it, okay? Now, obviously, I don't only look at one or two instruments, the entire list in the right is basically what I'm looking at, right? From major currencies, commodities to indices, to, a little bit of like Bitcoin. Typically going down this list takes me about 10 minutes or so. If there is something interesting, I'll tag it. Like, for example, this few things I'm tagging it. There's no setup, right? But that is something interesting that I will keep an eye on. This is where I would spend a little bit more time to go into that and see if there's any potential setup, right? So like dollar yen here has something that we can look into, not today, but next week. Simply because we have some criteria are filling in, right? We have liquidity sweat, we have breaker structure, we have some order blocks here. If the market moves back, that can opens up an opportunity for us to look for the buy. All right. So again, you need to be very clear of the setups. What conditions you want to see. Then only you can be quick, in all this, right? So as I mentioned, you need just like your angle is how can you minimize time and effort, yet achieving, if not equivalent, more result. Okay. That's the whole idea. Okay. Um, Hopefully that gives you an idea of, like the application of the whole principle of 80-20. Okay. And the general idea of the framework, right? Why a framework is so important. Okay. Um, yeah. So let me go back to this. Right. Okay. So that's the DSC framework, right? So how do you find your 20%? Okay. Again, this is just a guideline, just some suggestion. Doesn't necessarily mean you need to follow exactly. Um, you want to find your 20% by auditing your past 100 trades, right? So what I mean by that is assuming you have a couple of number of trades, right? It doesn't necessarily need to be 100. Let's say you have 20, okay, you have 50, right? Same process, right? What you want to do is you want to look at what worked, what did not, right? Now, when you start to identify what worked, right? Of course, there's some basics, right? The basics is you have a plan. It's not a guesswork. It's not a flip a coin. You have a plan, okay? And then what you want to identify within that is what are the elements that contributed to that rate being profitable. I'll give you one example, right? Even to today, I can identify what is an A plus setup and a valid setup, right? A valid setup is like, it works sometimes, but I don't really have a lot of confidence in it. And A plus setup is I'm very confident in it. So what is that difference between that? Okay, it's in SMC model, it's the difference between a liquidity sweep, meaning if a setup has a liquidity sweep versus another one that doesn't, the one with liquidity sweep has a higher probability. Um, Another element is does the setup have a fair value gap? Okay. If today a setup has a fair value gap and the other one doesn't have a fair value gap, um, then the fair value gap one is high probability, right? So elements like that, right? Very, very small elements like that increases the N, right? And that's where I can identify moving forward, right? If today I have 5 trades, right, that I can take, how do I filter it, right? How do I find out of that 5 trades, the 20%, which means which out of the 5, if I only want to take one of the best among that 5 trades, right, which is 20%, I need to be able to identify that, right? So in other words, instead of like having my attention focused on 5 trades, having to manage 5 trades, having to risk 5 times in the market, what can I do is I can actually focus on maybe one trade. And if that one trade has a very high odds of winning, great. I spend the least amount of time, but I achieve, a full potential profit. Okay. And I avoided maybe some losses. So that's the whole idea, right? Of 80-20. Okay. In terms of times, right? This is very classic. Okay. For me, I typically don't like to execute trade on Monday. Okay. Why? Because I realize that again, trades that I take on Monday, generally it's not a very high probability win rate, right? So I tend to avoid it, right? Which means what? Monday is a chill day. Okay? I'm not too eager to key in my entries and things like that. Again, 20%, right? So the general understanding of 20% or 80-20 is you the misunderstanding, I would say, right, is to take it as, oh, I'm just gonna chill. Okay. But the essence behind it is focus and find out what are the elements that contributed to the success. Okay. And then you want to really hammer in on it. That's the whole idea of this 80-20, right? A lot of times people will just understand that, oh, that I can away a lot of things. I don't need to do a lot of things. Yeah, in a way, but what you want to really focus on is what works, hammer in on that. Okay. Hopefully that makes sense. Okay. So some ways to help you achieve that. Obviously you need to journal, right? Journal is not only just about the outcome of the trade, but as I mentioned, right, you want to go into the details of like, all right, this is a winning trade. What contributed to this winning trade? Is it not just a technical aspect, right? But also more like maybe a psychology. If you're not feeling well, you realize that if you're distracted on the day, you tend to make mistakes. Then you know, right? In the future, if you're being distracted, don't trade, don't analyze. Okay. Take a break, right? Things like this is important, right? Little details that helps to stack it up, right? Yeah, so create a best trades only folder, which means put in all your winning trade into record, study that, go and find out what contribute to your winning trade. Among all your winning trade, what is the common thing that's repeating itself so that you know in the future if something like this occurs again, that's an A+ setup, right? So look for patterns in your success, right? So a lot of times people would say learn from your losses, right? But to be honest, there's also a lot of important lessons that you can learn from the winning trades, right? And that's also very, very important. Okay. So 80-20, okay? Number one, obviously you need to track because you don't have data points. You don't know what to work on, okay? Start to focus on what works, right? Hammer in, right? As I mentioned, it's not about cutting down things all the time, but it's more of like zooming in and focus on what works, amplify that, okay? Focus on that, right? As I mentioned, step 3, repeat, refine, identify it so that you can repeat it as well, right? And then of course, you need to review it on a week-to-week basis. Of course, in the market, sometimes it's cyclical, right? There's seasonality to it. If today you enter the market where the market is generally very quiet, it's in the range, and then you only gather data during a period, then it's not a holistic plan, right? Because you're just looking at a very, very small, in the general term, it's a very, very small aspect only, right? So typically you want to experience at least a full year of the market. Okay, then you have a better idea like, all right, some part of the market, sometime it's going to be ranging, sometimes it's going to be trending very nicely. So if you experience both of this environment, your trading plan would make a little bit more, I would say, comprehensive, right? Because you accounted for the part where the market is quiet and then the market is trending. Hopefully that makes sense. Yeah. Okay. So the whole objective when you start to streamline all this thing is, you gain back more time because you spend less time doing unnecessary stuff. You focus on what's working. There's less decision fatigue. Like I can't share with you the framework of DSC, right? If there's no direction, that's it, I move on. Okay, I don't need to crack my head on like, so should I be buying myself, right? Because when things are not clear, I just move on. Okay. You get more consistent result as well because today you know what works. You can focus on that. You know what doesn't work. You can avoid it. And you get more consistent results from trading, right? And then of course, you get less stress. You spend less effort. You start to enjoy trading again, right? Because at the end of the day, to be very honest, majority of us comes into the market trading, and of course, we don't spend minimum amount of time, but yet still make profit, right? We want to break away from that, what we call 9 to 5 work. And why you want to break away from that is because a 9 to 5 work constrain you in that time period, right? You need to be there. If you end up trading in the environment where you need to be there in front for a certain period of time, then you're taking away the 9 to 5 and then putting yourself into another 9 to 5. Doesn't make sense, right? So hopefully, today's sharing gives you a new perspective of what are some of the things you can work on. Okay. So all good. Yeah. So I think generally that's what I have, but I'm pretty sure you guys have questions. Okay. Let me jump into the Q&A, see what questions you have. And then we'll, further elaborate and work on that. Okay. Good. So the first question I see I'm going to just go down right the list. First question I see here is from Amelia. I'm always in the cycle of doom in trading. 可以给我15分钟吗？你可以收拾。什么那个 news 啊，我分播啊，哦，maybe 因为我要 webinar 所以我一下可以吗？我可以多好，一下这样。Okay, can. Thank you, thank you. Sorry about that, guys. Thank you. All right. So I'll just get back to Amelia's question. So the question is, I'm always in a cycle of doom in trading. Should I just change my trading style or shift to other instrument? Now, this one here, my suggestion is identify what is the element or factor that causes you to have that, what we call a cycle of doom. Okay. Don't immediately think of the solution, but identify the problem first, right? Because if you don't identify the root cause, what happens is you shift to another instrument, you change to a different style, maybe from short term to strain. Problem will arise again if you don't solve the root cause, right? So you might want to drill down and identifying what exactly causes you to be in this cycle. Okay. And more specifically, maybe, because I wouldn't know the challenges you're facing right now, right? Maybe you need to identify, you need to be more specific in terms of like, what do you mean by the cycle of doom in trading, right? So hopefully that is that's the starting point of how you can actually solve it. Right? Fatinha here asks, do you have any favorite currency pair for your strategy, or it works all currencies are going? This is there isn't any specific one or favorite one, right? Because for me, as I show you just now, right, I looked at a couple of things, okay? Ranging from major FX pair commodities to indices and even Bitcoin, right? Obviously, I don't trade Bitcoin very, very frequent. Majority of the list that you can see, they're generally in currencies. So it works, right? Because the framework that I'm applying, the strategy I'm applying, generally works for all instruments. Right? Ferdows here has a question: do you trade every day or just wait for a nice setup? I don't trade every day. Typically, because I'm looking at 4 hour and 1 hour, average week I get is about maybe 1 to 2 trades. Okay. The setup can be more, but the active trade, that means trades that get triggered, average a week is about 1 to 2. Okay. And again, you don't need a lot, because if out of that 2 trades that trigger, 1 break even, 1 is profitable, that week itself is a profitable week, right? And if today you based on the risk to reward ratio, if you risk 2%, you can easily make 4%, right? If you risk 1%, then potentially you can make 2%, given if your risk to reward is 1:2, right? So it's not about the quantity, right? It's more about balancing the effort you put in versus the potential reward, right? Because if today I only spend about 30 minutes a day on average, and I can achieve, let's say 2% profit in a week, fantastic, right? Because I'm spending like 30 minutes every day. That's about like 30 times 5, 150 minutes, slightly more than 2 hours, right? But I can grow my account by 2%, 3%. Why not, right? So look at it from the perspective of effort versus outcome, right? So that's the core combination of 80-20 today. Okay, so hopefully that makes sense. Nasra here has a question as well. The 80-20 rule suggests we should focus on trades or strategy that deliver most result. But in real trading, how do you distinguish between a high quality setup and the one that just got lucky? That's a good question. Statistics, right? So data points is important, right? Because again, if today I take 2 trades and they're winning trades, it's a very small sample size, right? And I can't identify what contribute to that. But today, why I'm so confident in the setup that I have, because I know that statistically, out of 100 trades, for example, 60-70% of it will work, even that the conditions are fulfilled, right? So I know, again, the element that contribute to a high probability set. It's no longer about guessing, right? But obviously you need to understand it's all probabilistic, right? Even if you have an A-flat setup, it doesn't mean you're going to win that trade. It's just that over time, with statistics, you know, it's going to give you about 60-70% of the win ratio, right? So that question, to answer that question, is really about having that sample size and you being able to identify what element contribute to the setup. Okay, so hopefully that's clear. Another question here is from Mooney. If 80% of trading advice is just noise, how can a trader differentiate between valuable insight and empty noises when the noises comes from popular or even profitable traders? Good question as well, right? How do I identify? I think one very simple, straightforward thing is if something is too good to be true, right? If today I come in today's session and tell you that, well, trading is easy, you know, you can flip your account overnight. All you need to do is spend 5 minutes a day. Logically, it may not make sense, right? It's something that is too good to be true, right? And that's where you want to put in your critical thinking and judge, okay? If it's so easy, for example, okay, everyone would have done it, right? And if everyone would have done it, then why is trading, you know, still not, or I would say, why is there still so many people losing in trading, right? So this part here is where you need to have a little bit of a critical thinking, a little bit of a logical sense to identify what's what we call a marketing gimmick and what's real. Okay. There's this saying, right? Trading is simple but not easy. Okay. There's a fine line between simple and easy, right? Simple means, you know, the framework like I shared with you, DSC. It's a very simple framework of direction setup content. Nothing complicated about it. But is it easy to execute it? Is it easy to craft a setup of yours? Is it easy to design a trading plan? Not necessarily. Right? So you want to keep things simple, but understand that as simple as it goes, you need to be putting in minimum effort. Hopefully that makes sense again, right? Yeah. So if something in the general guideline is something is too good to be true, likely it's some sort of a noise. So that's something you want to be aware of, right? So hopefully that gives you something that you can start to differentiate, you know, what is what. Okay. I would also say this, right? If someone overcomplicates something, okay, you also want to question that, right? Because what I mean by that, if I've seen some YouTubers, some traders tend to overcomplicate a process just to make it sound that they know something. Okay. I feel that when you try hard to do that to kind of impress the audience, you know, then you also want to be careful, right? Because then that is like unnecessary stuff, right? We are trying to streamline what works and focusing on the 20%, not to make things a little bit more complicated. Okay, so I always say this, trading is simple, but not necessarily easy, right? So kind of have that in mind. Good. Okay, another question here is from Dali. I've spent a lot of time chasing the perfect strategy instead of refining what already works. At what point do you think we should stop searching and just double down? Would love to hear advice. Good question. So the thing here is, a lot of traders would be in that cycle where when they encounter maybe one or two losing streak, they would very quickly jump to the conclusion that, oh, this strategy doesn't work anymore, right? Um, you want to be very aware of it and not fall into that trap, right? So what you want to do is some little things that might help is, as I give you an advice earlier in the slide, right? Let me just go back on that, right? Create a best trade only folder, which means keep track and screenshot or record down all your winning trade, right? Uh, this is important because you want to have some sort of a reference back, what works. And it also gives you the psychological comfort of knowing that, hey, this strategy works. Maybe it's just, part of a big picture where some trades are definitely going to be losing one, right? So this is a very fine balance between the sample size of your trade. Okay. So if today you tell me, okay, I only have 10 trades to work on, that obviously is a very small sample size, right? To me, at least about 20 to 50 trades to work on. Okay. So this means that you want to trade or you want to pay 20 to 50 trades on the same strategy of the same setup to come to a conclusion of whether this strategy works or not. Okay. Today, if you have taken 20 to 50 trades minimum of a similar strategy and a similar setup, and you realize that, hey, my win rate is 50%, okay, meaning there's something that is working there. Okay, maybe out of the 50 trades, you break even. Great, there is also something working there. If out of the 50 trades, you lose 40 of it, then there's something not working, right? So a good balance point is always have sufficient sample size and then look into that sample size and look at it from a big picture perspective, right? If it's a break-even outcome or you have a 50% win rate out of this sample size, there are elements that are working. Okay. And then your role, your next step is naturally to identify again what works, right? So that's when you go back into that sample size and look at what are the winning trades, what contribute to this winning trades, right? Then you hammer in on those. Then you can also fight to the losing trade, right? What are some of the elements that consistently appear that results in the trade losing? Avoid it, right? Maybe there's some elements that are missing. Avoid it, right? Meaning next time when you look at the setup, oh, this element is missing. Don't take that trade. And follow, right? Or you start to identify, okay, every time I do a counter trend, I lose. Great, don't do counter trend. Can we follow that thought process, right? So when do you stop searching is essentially when you achieve some sample size and you realize that within this sample size, there are elements that work, right? If today you try a strategy, try to set up and then out of the 20 trades, you lose maybe 19 of it, you lose 18 of it, right? Which is majority of them losing. You need to find another strategy. Or study that losses, flip it, okay? Meaning do the opposite, right? Because if something doesn't work this way, you try the other way, maybe it works. Okay, but that's also AKA switching a strategy, right? So that's the idea behind it, right? If today you have a sample size, you have certain elements that's working, that's the time to double down. All good? Okay. So generally, that's the question I see. Hopefully, it's clear. Also giving you better insights into how to streamline your trading processes, how to focus on the 20%, how we achieve the 80% result. So, all good. Okay. So I don't see any questions from here. Maybe what I'll do is I'll pass the time back to Alex.
Okay, great. Thank you so much, Kar Yong. And thank you to all of you. I hope that we have addressed your concerns well. But if you have any other questions in the future, you can always reach out to our live chat team through the Bull Prime website. So that concludes our webinar today. Thank you so much again, and thank you for spending your Friday evening with us. And remember to trade smart with Bull Prime. And thanks, and enjoy your weekend.